For a long time, buyers were sold a very simple idea. Steel Rolex models were superior to gold. They were safe purchases. Prices would always rise. Supply would always be limited. And if you managed to buy one at retail, you were supposed to feel lucky just to be included. That story is now falling apart. Not slowly, not quietly, but all at once. What's coming in 2026 isn't just another market correction. It's a complete reset, financially, culturally, and structurally. And Rolex is right in the middle of it. If recent price drops felt uncomfortable, the next phase will feel impossible to ignore. Before we get into it, make sure you're subscribed and notifications are turned on. The luxury watch market is changing faster than most people realize. And by the time many notice, the damage will already be done. To understand why 2026 matters so much, you need to understand what powered Rolex dominance over the last decade. It wasn't innovation. It wasn't major technical breakthroughs. It was controlled scarcity. Rolex trained customers to believe that demand would always be higher than supply. Dealers stopped acting like retailers and started acting like gatekeepers. Waiting lists became bargaining tools. Buying unwanted jewelry became a requirement. Access became something you had to earn. That system worked, until it didn't, because Rolex assumed something that was never guaranteed. That demand would last forever. For years, estimates suggested Rolex produced around 1 to 1.2 million watches annually. When pandemic-era hype exploded, the company made a major decision: expand production. But manufacturing doesn't scale overnight. New facilities take years to build. Equipment takes time to install. Workers need training. There's always a delay between planning growth and seeing results. That delay is now ending. While many people focus on Rolex's massive upcoming factory projects, they're missing what's already happening. Temporary and auxiliary production sites have been operating quietly since the mid-2000s. Their purpose is simple: clear backlog and boost output. By 2026, these facilities will have been running long enough to significantly increase supply. And here's the problem. Supply is rising at the exact moment global demand is weakening. Retail scarcity is disappearing. We're already seeing it. Exhibition-only signs are coming down. Waiting times for core models are shrinking. In many areas, entry-level steel watches are becoming walk-in purchases again. Once buyers realize they can simply wait and buy normally, the fear disappears. And when fear disappears, premiums collapse. The Rolex as an investment narrative is officially dying. Between 2018 and 2022, people who didn't even care about watches were buying Rolex models because they believed they were outperforming stocks, real estate, and crypto. That mindset has vanished. Many flagship models are now worth far less than they were at their peak. Some hype-driven pieces have lost values that would have seemed impossible just a few years ago. But the most dangerous moment is still ahead. Retail prices continue rising. Secondary prices keep falling. In 2026, those lines are likely to meet. When popular steel models sell at or below retail on the open market, the entire dealer system breaks down. Why wait? Why bundle purchases? Why overpay? You wouldn't. The gray market is heading toward a serious liquidity crisis. During the boom, gray dealers relied on speed. Buy quickly, sell immediately, hold nothing, keep money moving. Now they're stuck. Inventory purchased at peak prices is losing value. Trade-ins are being rejected or severely discounted. Cash flow is tightening. When dealers can't sell, they stop buying. That's how markets freeze. By 2026, expect mid-sized gray dealers to shut down, liquidate inventory, and flood the market with discounted stock. These fire sales will push prices even lower. This creates a double supply shock. New watches from Rolex collide with panic inventory dumped by failing dealers. At the same time, another weakness is emerging: the certified pre-owned program. In a rising market, Rolex's CPO system looked smart. In a falling market, it's becoming a burden. Authorized dealers are holding used watches priced far above real market value. They're backed by official branding, but disconnected from what buyers are willing to pay. Customers see better deals elsewhere. Inventory sits, sales slow. What was meant to control the secondary market is now exposing how unrealistic prices became. And this pressure isn't limited to one region. China, once a major growth engine, is turning away from visible luxury. Policy changes and tax pressure are making ownership more complicated and less attractive. Unsold watches are being redirected to Western markets that are already saturated. Meanwhile, tariffs and rising costs are squeezing margins everywhere. No one escapes it. Not buyers, not dealers, not Rolex. At the same time, Rolex is facing a cultural shift. The quiet luxury movement is growing. Buyers are moving away from obvious status symbols. They're prioritizing subtle design, craftsmanship, and individuality over recognition. Rolex, once the ultimate success symbol, is starting to feel predictable. Affordable luxury brands are attracting value-focused consumers. Independent watchmakers are attracting collectors seeking real rarity. Even related brands are competing for attention. When everyone can get one, exclusivity fades. Another serious issue is counterfeiting. As prices fall and desperation rises, fake production increases. Authentication services are reporting higher rejection rates, with Rolex dominating failed submissions. As replicas become harder to detect, confidence drops. And when trust drops, transactions slow. So what does all of this mean? Rolex isn't collapsing. They're not going bankrupt. They'll survive. But the super cycle is ending. Supply is increasing. Speculators are leaving. Demand is weakening. For flippers, the game is over. For gray dealers, survival is uncertain. For authorized dealers, selling becomes normal retail again. And for anyone holding modern Rolex models as investments, reality is approaching fast. So here's the real question. If you had $10,000 to spend in 2026, would you put it into a Rolex and ride out the storm? Or would you look elsewhere for design, craftsmanship, and true scarcity? Let me know your thoughts in the comments, because this reset is already underway, whether people are ready for it or not.